Eric, good morning and welcome. Do investors come back from the break energized and ready to plow into the markets and anticipating that earnings will likely be better than the last time that we saw, particularly within that banking sector?
Yes, certainly. I think already the momentum has already been built in the market. And say for anything, we're probably going to see relatively strong results. Just from the statutory reports, we've seen lending increasing quite significantly from the second half and the third quarter. So obviously the banking results should generally be positive, and the market generally has been trading within narrow margins. Obviously, the results could provide an impetus as to which direction the market is going to take. Yeah,
but trading within the narrow margins just suggests that investors are wary that there could be surprises in some of those results. How likely do you think we're likely to see a surprise coming out of the earnings of some of the banks that are coming up?
Typically, we don't get very much of surprises in the third quarter earnings. And the reason we've been trading on a narrow margin is because already the market is up over 40%, making it one of the best performing markets in Africa. There's really very little room, in terms of upside. So I think investors are a lot more cautious into buying into expensive stock. But obviously, because the results have been supportive, then we've seen investors relatively, the appetite remaining quite high.
So the sense then that you get is that the market is judging that perhaps we are trading here on overvalued territory, and therefore, unless the earnings are good, we should see the market coming under pressure.
Not necessarily. I think the earnings is really what's going to determine that. Obviously, there are some expectations that investors have priced into certain stocks, and depending on how the actual results come out, then we might see a little bit of profit taking, or a little bit of more confident buying by institutional investors, especially.
Yeah, we also had recently Standard Chartered its rights issue oversubscribed by 161%. That's a big support from shareholders and a big vote of confidence. Is it justified in your opinion?
Well, there was very little dilution on that rights issue. But in any case, if you look at the recent capital raising activities, we've seen housing finance being able to raise 7 billion, a substantial oversubscription from the 5 billion that was initially targeted through a bond issue. We've seen quite a number of other institutions also. TPS Serena has raised funds successfully. The government has been able to raise funds from the market. So you could say, given the low interest environment in the market, that investors are pretty confident that the market is going to do well. So on a valuation basis, I think investors have also adjusted the risk profile of investing in Kenya. And obviously now we're also seeing a lot more foreign investors looking at the country, given the low interest regime and low inflation. And also we've seen also the political environment improving quite significantly. So I think all those are building up to really make Kenya an attractive destination.
Absolutely. Would you see more legs under Standard Chartered to run after that rights issue? And also, as we spoke about a little earlier, given the results that we're expecting?
I don't think we will see a very substantial rally from now onwards. I think investors will probably wait until the end of the year to really see a substantial rally as people speculate ahead of the full year earnings and the level of dividend payout. Obviously, for the third quarter earnings, it's mainly the banks which are going to be announcing results. But at the end of the year, that's when we'll have most of the institutions sort of declaring results. And from there, that's when we'll be able to really gauge how next year is going to be. Already we're starting to see some sort of winding down in 2010, but so next year really is now the target. I think this year we've done pretty well.
Yeah. Let's talk about Barclays Bank, which is, of course, Standard Chartered's rival in Kenya. Now, we saw it closing at a 2-year high before the markets closed. Do you see momentum staying within that stock?
Well, investors have been quite keen on the stock, especially because they sold their custody business, and they sold it to Standard Chartered. So Standard Chartered, we've seen it expanding. Barclays sort of exited the custodial business. So on 2010 earnings, we are going to see a one-off gain on Barclays earnings. But I think investors haven't been very convinced about very sustained strong growth going forward. And so we, even though we've seen the price rallying quite a bit, it's been a lot more gauged because the gains this year are going to be one-off, and they still have to factor in earnings from this time onwards.
Eric, between the two, where would you put your money?
I would say, I'll probably say they're probably fully valued. I'll probably put a hold on both of them. I'll probably say, I mean, most of them have really rallied quite substantially, so I'll probably say a hold on both.
You're not buying any of them?
No, I wouldn't.
I see you don't really like them, yeah. Now, recently we saw the High Court declaring that the jailing of defaulters was unconstitutional. And of course, we know someone has to pay for this. Banks are likely to come and raise their lending costs. What kind of an impact do you see that having?
I don't think very significant. I think if you look at some of the structural changes that the central bank has initiated over the last maybe 1-2 years, some of them are starting to bear fruit. But obviously there are quite a number of factors that build up into the cost of credit, and obviously there's partly the cost of credit itself, and that's come down quite significantly. You have the issues about the legal system. The longer it takes for cases to get resolved, I think that has been the main concern for banks, and how well they're able to recoup their investments. So I think the reforms in the judiciary, especially under the new constitution, the efforts to try and make the judiciary much more efficient and being able to give rulings on commercial disputes, I think that's really the most important part for banks. In terms of credit reference bureaus, we've seen that being implemented, and I think that's going to work well, especially going forward over the 1 year, 2 years, as the banks build up a database of credible information. So overall, I think just generally the reform of the institution of the judiciary is the more important part, rather really than the ruling. I think the rules are there, but how quickly they get implemented is a real concern for the banks.